I want to make sure we have time to cover Walmart. So I feel like this is kind of a gold standard as well for a consumer staples retailer. So going back to 2008, that year that I mentioned in the lead up to the financial crisis, the lows reached during that time. The S&P, like I said, down 40% the year. Walmart was actually up 18% that year. So just a single data point for you to consider. But more recently, this is a story that I think shares a lot of similarities with McDonald's because management's focused on growing its e-commerce arm. They're focused on investing and acquiring all these new businesses and taking generally more market share. And it's a long-term focus that I like to see, even if it means that there's going to be a near-term hit to profitability in the next fiscal year or two. And it's a focus that seems like management at both these companies, McDonald's and Walmart, are taking on, I think will be good for shareholders looking out 5-10 years and further. What are your thoughts here?
So longtime listeners will remember that we devoted an episode to Flipkart, which was Walmart's great e-commerce acquisition. That's the up-and-coming e-commerce online operation in India. One thing that's really caught my eye, though, since that show is Walmart's attention to, again, millennials and Gen Zers. It's invested in a number of brands. I'll read a few: Bonobos, ModCloth, Moose Jaw, and Shoebuy. These are non-traditional categories for Walmart. So it's investing where millennials are shopping and in the brands that millennials like. And it's also really ramped up its own private label offerings. So fashion, again, turns out to be a large opportunity in the economy in a good year or a bad year. And Walmart, in doing this, is extending beyond that brick and mortar away from what Jet.com, another acquisition, brings it, which is sort of a quasi-competitor to Amazon, and more of an individualized standalone concept with each of these brands that it acquires. So it's diversifying that base out. Of course, when your revenues are in the several hundreds of billions of dollars a year, it takes a long time for an effort like this to provide diversification. But we've seen it acquire delivery companies, logistics companies, sort of waging this multi-front battle with Amazon. And I would urge listeners to look beyond Amazon, to a future where those retail stores still exists. Consumers are still going into Walmart stores, but also buying products which you today might not associate with this company. Also wanted to note, in the most recent quarter, Walmart's U.S. comps rose 4.5%, which was the best performance in 10 years. I believe they are reporting results on the 15th of October in just a few days, so we'll get to see if that trend continues. It's a long-term classic defensive play, but again, there's a growth story in here that's starting to emerge.
All right. Thanks, Asit. We have 2 more minutes, so I want to give you an opportunity with this broad conversation that we've had on the concept or the idea of consumer staples as defense during market downturns. What do you want? What's a big takeaway you want to leave our listeners with?
The biggest takeaway, we really haven't mentioned this, but it's probably a question that many listeners have as we pull to the end of the show. If I buy these stocks tomorrow, am I just going to suffer another big downturn as I have with other names in my portfolio? My answer is we might. You never know how low the market can go when there is a bear market. However, each of these companies is grouped around 21 times forward earnings, and that's fairly cheap given today's market. The only outlier is McDonald's, which is trading at 24 times one-year forward earnings. So even with, take TJX, it's 42% rise. It's still comparatively cheap when you look at the broader market. So you have some true defensive muscle in here. I would urge listeners to explore these and other big quality stocks in more detail that are staples, and maybe start nibbling, adding some defensive positions to their portfolios.
Yeah, and reiterating some of the warnings that we had, the takeaways that we had when we talked about this, what's driving the recent volatility, and this was 2 weeks ago in the show 2 weeks ago. Again, panicking, not the right move. Selling out of everything, not the right move. They're in a position right now to think about your portfolio, and if you're worried about something like this, like a downturn, to consider, am I diversified? And if I'm not, these are the kinds of sectors and companies that you can look at to help bolster things. And that's just one of many routes, hopefully, that you can take.